Okay. Yeah. So, I don't know if y'all know what day trading is. Yeah. Yeah. Feel free to ask me questions and stuff. It's like stop me
Yo,
anytime.
Lance,
But
are you recording this?
yeah. Why?
Ah,
Yeah. So.
nothing.
Okay. Yeah. So, just to start off, the website for this place that I use is called Trading View. So I'd recommend pulling this up, like if you guys have like a laptop or something, to actually see what these are, the graphs and charts. But once you guys are here, you should be able to scroll down, and you should find like the yeah, the Nasdaq here. You should click on it, and then full chart it right here, and this should pull you into the Nasdaq.
Wait, can you do that again?
Yeah, hold up. This one is the different Nasdaq for some reason. Let's see. Hmm. Why is this sound different here? Let's see. Mm-hmm. Huh. I've actually changed this thing. Hold up. Oh. Okay. Click on markets up here. So just click on markets. It should bring you to this page. I think it should be this one right here. Let's see. Why is this one different?
Wait, how'd you get there?
Click on search up Trading View, and then it should pop up like this. And then just click on markets up here. It should be highlighted.
Should we create our own account?
Um, I don't know if you have to yet, but you can if you want to. Where is this one?
Landon,
What? Oh,
um,
actually, that might be okay.
you have to. This is the Trading View app, right? We
Yeah.
all don't have this right now.
Oh no, you don't have to download the app. It's a browser. So like on your browser, you just search up Trading View.
Okay, so you want us to go to like Google and type in
Yes.
tradingview.com?
Yeah, just type up Trading View like this in your browser, and then click on like
Okay.
just the one that says
Okay,
Trading View.
just slow down a little bit, sweetie. So tradingview.com and then just do we have to log in?
I don't think you have to. I
Okay, can
think
you do that for us? Just click so
yeah. Yeah,
tradingview.com, click on it.
search up Trading View, and you click on Trading View here.
Okay, slow down a little and then
And then I think instead of typing instead of going to the markets, just click on the search bar here. So the search bar, and then make
okay.
sure it just says I think click on the futures one. I don't know if it's highlighted different for you guys, but click on futures. It should be highlighted here, and then click on the Nasdaq one on launch chart. And it should just
All
launch
right,
it.
just slow down. Just
Yeah.
slow down then.
It should look something like this here. It's just your chart. Yeah, let me know if you guys still need help finding it.
Hold on. I just got to markets. So I'm on Trading View. I clicked on markets
Uh,
future or something.
yeah, no.
Then what?
So So instead of clicking on markets, just click on the search bar here,
Okay, search bar, then do what?
and then
Oh,
there's like these little what's it
the
called?
tabs up
Yeah,
there.
the tabs. You click on the futures. So
Futures.
I think you might be on, yeah, on all here. So just click on futures,
And then after that, which one?
and then the first one right here, it should be Nasdaq 100 futures,
Okay.
and then just click on launch chart.
Launch. Did you say launch?
Yeah, just, yeah.
Where's the launch again?
It's it should be like if you're hovering over it, it should say like launch chart right here, the one that's highlighted white.
Oh,
Oh, you're already in there.
okay, we're on there now.
Yeah,
Anybody else?
yeah. I think you're the only slow one, mommy.
Can you tell us why we need this?
Okay, so this right here is like the chart that I use that shows like the market. So the market that we trade, or at least I trade, and we're probably gonna be trading, is the Nasdaq right here. So this is the one we just clicked on, and so this is the Nasdaq market. There's like a lot of different markets, but the main best one is like usually the Nasdaq is what most people trade on. And so yeah, so we're just gonna be looking at the candles on here. I think you guys is should you guys all look the same as mine, right? You have like the little wicks on here, so your candles should look like this. They have like these little body candle and like
Which
little
month are
wicks.
you looking at? You should tell us which month and
It's right at the beginning, so you should be at this start here. So just all the way to the right.
okay.
Yeah, yeah. Do you guys' candles look like this too, or are they like I don't know, something else?
Yeah, they're just green and red.
Okay. Yeah, the colors, my colors are just different, but as long as they have like these little wicks right here, so like the little lines that go up, and then they have like the full body candles or like the colors. So yeah, make sure
Yeah.
make sure everyone's candles are like that. And then you guys should also be like on the 1 minute here, so you can either at the top left up here. There's like these it says 1 minute, 5 minute, 15. It goes all the way up. There's like so many different times. What you guys can either do is like press like one and then press enter to like enter your the time frame you want to go on to, or you could just click up at the top here. So right now I'm on the 1 minute. So if you guys are like on like I don't know the 15 minute or like the 1 hour, it looks slightly different than if you're on the 1 minute here, which is what I'm on right now.
Does everybody have those?
I don't got that on mine.
What?
Lenny, I think you
I
have that
got
in
it.
settings already.
You gotta zoom in.
Hmm?
If you zoom in, you can see
Still
it.
don't got that.
The candles.
Zoom in.
No, I see the candles. I don't see the 1 minute, 5 minute.
Try pressing on D.
Oh
Okay,
yeah.
I see.
Yeah. Okay. So yeah. So there's like it should be like an arrow, like a down arrow next to like the D over here, which is the day.
Yeah.
Yeah. This is also the time frames here. Okay. Yeah. It's gonna have they haven't favorited. But yeah. Okay. So it should be on the top left here, next to the D. There should be an arrow. Click on that, and it should open up the different time frames here. So there's seconds, there's ticks, there's minutes, and there's hours, days.
Did you say choose 5 minutes?
I was just saying that like these are the different times, but choose 1 minute is the one I'm currently on. I'm gonna be switching them to like back and forth, but uh, it's just saying letting you know that these are the time frames up here.
Hey, Landon, can you go back and explain what option is first?
Option.
So we know, or what is it that you're doing
Oh,
the day trading, or what are you
okay.
doing the
Yeah.
trading
So
on?
so for when you're trading, so there's like tons of different like markets. So if you look like here, these are all different assets that you can trade over here. So
Are you doing the day trading or the
yeah,
option?
so everything here is basically like kind of day trading, but what main people use for day trading is what we call futures right here. Uh, Futures is like I guess all these like energy, agriculture, currencies, metals, world indices, stuff like that. So these are like the what we call like the futures, what you're thinking of is options. So that is basically like stocks. Stocks is like what like different companies like Amazon, Apple, Nvidia, Tesla. So we're not trading these right here because those are stocks like um, those they have to invest in actual companies. So what we're actually trading is futures. So we're trading these prices here, these currencies. And so the main one that we usually trade is the Nasdaq. You can still trade all these other ones here too. Like you can trade gold, silver, copper, platinum, oil. But the main big one is the one that we use right now, or the one I usually trade is the Nasdaq here. And the Nasdaq is the top 100 companies like all in one. So they're all combined into one, and that's like uh, that's what we trade here. Any more questions? Okay.
Okay, no, thanks. I'm good.
Yeah. Okay, so let's see here. Okay, yeah, so how so what we usually do is you usually how you read the market is what is something like is where you always look to your left. So right now this is where the market currently is right here, the most right side right now. So this is how like the market is moving. So this is how the market moves like this. It slowly ticks up and down like this and makes these little what we call wicks, these little lines right here. So so each of these like was it orange bar and white bar is what we call candles. And so uh, the what we call the full body candles or the body of it is basically like this right here. So if you look at here, there's like this one is like it's just a full bar, um, a full body candle, and you can tell by that it's because it doesn't have any like wicks, and this one here is like it actually has like a wick up like the candle. So if you like imagine a candle, you know, it has like a little wick. This right here is what we call the wick, and this is like the body of it. And this is like this is how like the market moves right here. So you can tell like it moves up and down like this, and this creates the little wicks right here. Okay, and then so how you would read the market is starting from like the right side here, right? So you're here, and say you want to enter. Okay, actually I should go over this. So there's like when you're buying, you're buying positions. So right now, so this right here, if you're looking at this, oops. Right, so this green area here is the buy option, and this red area here is the sell option, or the sell position. Um, so how this works is it can be kind of confusing a little bit, but since you're buying the position, you're either it's kind of like I imagine it as like betting. So there's two different like ways that can go. So like your buying position could be like this. So this right here is a sell position, or what we call a short, and this right here is a long option, or a buy. And you can tell as like if you're looking at this as visually, the green option here is your profit, and the red part right here is your loss, so like your negative. And this white line right here, this in the middle, is your position. So in this case, let's say if I were to put this thing right here, right, and the market moves up like here, it moves all the way up to here, moves up and comes down and hits my position, which is this white line right here. So this right now, it dips down into my negative, but right here, the bottom right here is my my stop loss is what we call it. And what that is that once the market hits like the tick, like the bottom tick of here, is when it stops me and I lose money basically. But since my position is here and it comes down into here, but it doesn't hit the bottom here, I'm still in my position. And so what the market does is it reverses up in here and to the green area, which is what I wanted to do, which is like because I'm buying. So I'm buying my position, or I'm betting my position to. I'm betting that it's gonna go up, is what I think of it as. And then here is what the short is. the short is basically like you betting that it's gonna go down. So say if I were to move this thing to like this right here, so if it was right here, see where my position is here. Say I entered right here, my stop loss is up here. So if it hits here, I lose money, and if it goes down, I make money. So what my market did here is it came all the way down to this area down here, and say I had my take profit, which is like where I basically take my money. So this is where like I exit my position and I still make money. And so what market did is like it came up here, and I'm betting that it's gonna go down. So once it touches here, and I enter my position, and it goes down here, and to hit my take profit, so I basically make money. So that's what I
And
think.
then
Yeah.
I don't understand when you said like how did you like separate the red and the green? Like are you looking at the top wick? When you're looking at that, how do you know that what's the losing point, what's the like winning point? Because you know how you had red and then green on top and bottom. How do you know like which half?
What do you mean?
You know what I mean? Like, are you looking at the top wick and then the bottom wick?
Are you talking about the candles
No, like you know how you separated those colors,
like
the
this?
green part, yeah, like that. How do you know that? Why did you put the red like a small amount right there, and then the green part that's
Oh,
really tall? Like,
okay.
what made you do that?
Okay, so yeah, so this right here is a good visualization right here. So what I'm visualizing is like the top tick is right here. So this right here is my money. So this is like, if the market comes to here, this is my take profit, right? So I can move this thing up and down, and this right here. So as I go closer to my buy position or my position right here, I lose. I don't gain as much money. So the higher this thing goes, is the more money I get, right? So the reason why usually my red is shorter is you kind of want the red to always be shorter than this green right here, right? Because you kind of want to bet, or not kind of, you want to bet less money, or you want to like risk less money. So right now I'm risking $110. So if the market comes down to here, right, and it comes to hit this position right here, so right where this orange line is, if it hits that, then I lose money, right? I lose $110. But if the market comes up to my top tick right here, right, this is where I gain $300 right here. So the reason why the red is usually shorter is because I want to risk only like $110 to make back 300. So even if I do like say, because trading, you're not gonna have 100% win rate, right? So most traders, like, to actually be profitable, using like an 80-70% win rate, which isn't too hard. But with that in mind, is that so even if you take losses, which you're gonna take losses, right? So say I took 3 losses or 2 losses, and I'm risking $110. So on this one trade, I lose $220. But say I make one trade, and I make a trade that's $300. So basically, I'm still in my green. So I'm up money because I still had like what was it? I still had,
Hey, Lan,
yeah.
how'd you get those that little highlight thing right there? Is that because you have money in there already?
Oh, okay, yeah. So yeah, I'm gonna go over this too, but yeah, to
Yeah.
get this thing
Just
right
let
here.
us know what we're looking at. Like, what
But you cut out.
So,
all those numbers on the right, okay? All those numbers that you were that green 24.118. So you're saying that's how much it costs right now, and you're trying to place a bet? Is that what you're doing?
Yeah, okay, so if you're looking at this right here, so this blue one right here is my position. And this orange one here is my stop loss. So you kind of don't want the number to go down to here, because that's how you lose money. And then my
oh,
green up here is the money
do
that
you
you're
have
gonna make. I'm sorry, what was that?
do you have that because you have money in there already?
Oh no, so this right now, so the only reason this thing shows up is that, so if you come down here to your trading panel, so at the bottom, there's like these little what was it called?
Yeah,
Yeah,
tabs.
little tabs. So if you click on the trading panel, this right here, it shows all the brokers, which is like the companies that like uh
Okay.
that like you invest, you put your money into, that uh puts their money into like the market. So there's tons of different brokers. There's different ones where like say TradeOvat. This one is where you trade futures. You can trade futures like I think some stocks. There's one like where and Webull here. This one only trades options and stocks. There's like this one Interactive Brokers. It trades like forex stuff like that. So there's tons of different brokers. The main one that you're gonna be using is the TradeOvat. This one here is that we trade futures. So is what we're trading. But how I got to the how to show like the if you want to see like the numbers how I did is that you click on the paper trading here. So this one here is your fake money. So if you click on here, you should be able to just click on connect, and this one here is all your fake money. So what you're able to do is like you're able to like spend and lose like fake money here, and you can like set your different price or your account balance. If you click on the settings right here, you're able to click on like reset account, and you can put in like your balance.
Kind of the other way, but
I'm sorry, what was that, mommy?
yeah, sorry. Just yeah, you can go back to look at that the main graph because I just didn't know you were placing bets or what, but
Oh.
it made more sense when you said that. You showed us the orange part because I can't really see it on the screen, but the orange part showed your that you were losing, and then the green part was the numbers shows that you would be winning.
You're talking about like this?
Yeah, I see
Oh.
that the buy because I couldn't see that before.
You
So
can-
buy in that very bottom one, orange,
Mhm.
that one I didn't see. So when you said that, that made more sense that you were trying to bet above that, right?
Yeah.
Above. Okay.
Yeah.
Anyway, you can continue.
Wait, what do those little lines mean?
What do you like the little dotted
Like
lines
smaller ones on the bar?
down here or
No, like on the counter or whatever. The wicks you said.
yeah, the wicks?
Yeah, what do
Yeah.
those mean?
So those are just like where the market has moved, right? So if you're looking at here, so see how the market like it slowly moves up and down like this. So this one, see if it moves, gonna move here. So it's gonna see it moves down like this slowly. So this one moves like it's gonna either go down. So if it goes down, it turns orange, and if it goes up, it turns white. So what the market has done, I'll see it like this. See what it is. And this one moved down here, right? So this right here at the bottom, the wick right here, is where the market has been. So it was just right here, and then it had a strong push up like this. So it turned back to white. And so how the wicks are created is that it's just because the market moves down to this area, but then the buyers and sellers they move in the opposite direction, which makes the wicks. So if you're looking at here, the market closed up here at this top right here, but it did at during the okay, I should go over this too. But yeah, each candle is like a time frame, right? So right now we're on the 1 minute here. So each candle here is 1 minute, right? So this is 1 minute, 1 minute, 1 minute, 1 minute. If I went to the 5 minute, each candle here is 5 minute. And so you're also able to see like how different the market looks like. So this is the 5 minute market, and like how this is like the 1 minute market, right? So you're able to see more candles if you go down to lower time frames. And so so during this 1 minute time frame, the market, if you're looking at right now, like the market moved all the way back up to here and it's pushing back down again, right? So market moved to this area and then pushed back up, so it's creating this little wick right here, and this one just closed below that wick. So if this closed right now, it would look just like this candle right here. So yeah, the wicks are just like where market has been.
Okay, so like that's like the difference, kind of or no?
What do you mean the difference between?
So I guess I don't know.
Just to sign up for everyone that just got TradingView, your screen might look it might be different colors too. So
Yeah.
like your screen might be on green and red. Or what Landon did is he changed the colors to his liking. So
Yeah.
so just I know.
Yeah.
I think you.
Okay, I get what you mean.
Okay. Yeah, I just wanted to know like yeah, the wicks are just like where the market has been, and then the full bodies here is like the full colors is like the body, and that's like the where the market has closed. So
Okay.
yeah, so you can tell like how the market has
I think it's kind of like it's showing where it starts to where it ended, right?
yeah.
So like if you look at the bottom of say the white candle,
real quick.
This one?
That's probably like where it started and where it ended. So I think that's like the gap in between is how much it like changed throughout the day, isn't it?
So they always start off like from the candle next to them. So if you look at this big one right here, this one here, this pushed. So this one was pushed all the way down to this bottom here, and then it's probably started like in the middle around here. So it started right here. So the candle started right here, or no, at the bottom here, because there's no wick. So the candle started down here. It closed on the right here and it started down here. So what the market did is it pushed all the way up to the top here, and then as when this market closed, I mean when this candle closed right here at the top, as when this candle came in, and so it started like around right here. This one then pushed back down here, created a wick, and then they pushed it back up. So there, basically every candle is like based off of the one on the left of it, the one right next to it. So this one started right here, and then pushed back up and down. So yeah,
There's like time frames.
Lennon, just to talk money wise, when you're saying that is so whatever you're buying, it's dropping, right? The price is dropping, price is going up. Is that
oh
so?
no, price isn't changing, right? So price, I don't know how to like read the exact price, but it changes every once in a while. So like sometimes, like right now currently the price is lower than like say if I was trading at like 8:30 a.m. when the London market opens up. So right now we're in the Asian session, and then once what we usually trade in is the London session, but there's different sessions, and then like each I don't know when the price switches, but at some point it switches. So right now this right here, so this move right here, from our position right here to here is $300. But say if I was trading in the London time, this would be probably like 1,500. So it's just like the price changes, but how the money actually works, it's just based on like how the price is, and then where your position is. If that makes sense, or answered your question.
I think I just have to do more research on that part.
All right, just ask. I don't know.
Yeah.
Well,
Because
just ask me. I don't know. What do you mean by?
Well, how do you know where to bet? Like, because right now you're talking about betting, right? So we're looking at the wicks. We're looking that, okay, now we know the wicks, right? We know where it opens, closes, where it's going up, where it's going down. So maybe like tell us your strategy of how do you bet to make money? Where do you go? What are you looking at in these so that you can know where to bet so that you will make money?
Okay. Okay. I won't go over strategy just yet because it's gonna be like you kind of want to know like a little bit of the basics, but so what I'm looking at is like, say right now this is a buy position, right? So say, let's see.
Hey, Landa, sorry, let me ask you a question. So, does your white represent the increase or the decrease? Which color is representing
Yeah,
what?
yeah. The white is like my increase. So like, or not increase. It's like the buy or like the long is what we call it. So it's like the green, I guess. Imagine as like the green here, and then my orange is like the red here. I can probably switch my colors here real quick, so it'll be easier so you guys can just tell. No. Like this. Alright, so okay, so this should look like you guys' or actually I switched them back and forth. Hold on, it's supposed to be this way. Right, so yours look like this, right, Similar.
Yeah.
Okay. Yeah, so this should be easier to represent. So, this green right here is like if you're doing a long position, so that you're betting if it's gonna go up, right? So I imagine it as like what these little I don't know graphs are. So green is good basically, and red is bad, and this white line right here is your position, right? So this is where you're entering. And then, so there's also the short, so you can bet short, which is betting that it's gonna go down, right? So saying if I was betting that's gonna go down like right here, I'd put my position right here. So my position is the white line, my red is basically where I lose money, and this green one here is where I gain money. Just thinking as
So
like simple.
basically, my bad. So
Yeah,
basically,
you're good.
you don't want to go into the red, basically, like all
Yeah,
the way at the red bottom or top.
yeah. In simple terms, yeah, you don't want to go to the red.
Alright,
I
alright.
just yeah, I just want to make sure that I know like because there's a long position, which is you're betting going up, and then there's a short position where you're betting going down. Right.
And does that mean that once it hits like your limit, it stops like bidding
Yeah, yeah. So
or
so yeah,
okay, it's like a limit, right?
yeah, yeah. So if I was betting here, right? So right now the market has currently tapped into this zone right here. So if I would have put my order right here, so if the market came down, tapped it here again, um, right now this is my stop loss right here, right? So I'm risking $90 to make back 275, right? So or I guess I move it right here to be. So this right here would be like a position right here. This wouldn't be my exact strategy, but this would be like it looks something like this, right? So if you want to buy right here, if I'm thinking, market's gonna come down to this area right here, it's gonna hit my position, and once it taps into here, I think it's gonna go up and hit this, right? So this right here would be how you take your order, and you set your stop loss right here, and so you're risking 90 for $200. So you're kind of just betting that once it taps here, it's gonna come back up to here. Uh, yeah, and then the same thing is like for the short here. So if I was gonna put my position right here, if it came to top to touch this my position right here, if it comes to hit here, I lose money. Hits here, I make money.
Then can you manually sell it like when you want to?
Yeah, yeah. So if
Okay.
you the top left right here, there's like buy and sell here. So this one it can get kind of confusing, but like once you understand it, it makes sense. But say I would have buy right here, right? So if I would have click on buy, so this right here is this number right here is my how many we call it minis, but it's like it's what we're how many like I guess positions that we're buying, right? So this is like I'm gonna buy one position, or I could buy five, six right here, right? So if I were to buy five positions right here, I click five, and I click buy, or I guess they don't let me have to do five right now, but I say two positions right here, right? So I click on buy. I think it's like. Alright, so I click this. So I set in I bought two positions. So this blue line right here is my position, right? If it goes below this line, I lose money, which is where my stop loss is. And if it goes above this line is when I make money. So right now, see it's going below the line right here. I'm down $80 right here, 90. So if it keeps going down, I'm gonna lose money. And
Okay.
yeah, so you can like to exit or enter your position if you're gonna use here, is you kind of have to think of it as like the opposite, right? So, uh, if you want to make money, so say this thing was going up right here, right? Say it went all the way up to the top here, so like how it's going up right now. Say it comes up like this, and say right here is where I want to exit off. I can either click the X right here, or I can click like sell, because you want to sell your position. But
Okay.
yeah, and then it'd be the opposite if you're going short. So if I was targeting a short, if I click on sell here, so I'm betting now that it's gonna go down below. So if it comes down below here and I say it came down to down here, I click on buy because I want to. This was kind of confusing, but you kind of want to like. How do I explain this? You're buying a sell position, and now you want to sell your sell position, if that makes sense.
Yeah. So just like flipped.
Yeah, it's just flip, so it can get kind of confusing. But
How do you make it like flip?
what do you mean?
Like how is it? You know how like when you buy it,
Mm-hmm.
like
Are you
when it
buying?
goes down.
You buying for it going up? Like you buying for it to go up, or you buying for it to go down?
Yeah, how do you change it to like make it go down
All right,
when you
so
buy it?
yeah, so these are the two different positions, right? So the sell position is what we call the short. So it's like it's basically a visual representation. It's this thing right here. So this right here is how like if you're targeting a short, so I'll sell here, So this you'd either come here, put this thing down, and you're able to like create your limit order here, or if you're doing it on here, you would buy a sell position, which you wouldn't have right now. So this right here is a sell position. So that means I'm betting it going down. And now if I were to click my buy position right here, this is me betting that it's gonna go up.
All right, that makes sense.
Yeah. Let's see. Okay. Yeah. Actually. So the see here. So for the like if you see like these little
Hello?
things that I'm
Oh,
drawing.
there we go.
Yeah. So if you see like these little things right here that I'm drawing, so these right here are like what's it? Different little like what's it called? Like tools that you use, right? So there's all these different little tools. Like if you're looking at my short and long right here, these little lines that I'm drawing here. So these are different tools that you can use. Um, to get that thing like either favorited right here or like where I have it like on my little draggable thing up here, is you come to the left side over here, and there should be like these little arrows right next to it. If you hover over it, if you can see like this little arrow down here, you can click on that, and then it will pop up like different like lines here, different channels, right? And so what I did is I favorited some of them, so these are like the ones that I mainly use. Alright, so this is how you get like your I think it's on this one right here, right? So your long position and your short position, I favorited these here, so I'm able to easily access it like this and set up my orders whenever I want to. So I'd recommend favoriting them to more easily access it instead of having to go to the left side and click on these manually.
Have you, or I don't know how far you are because I just joined, but
Yeah.
are you getting into your strategy yet?
No, I just went over like the bare basics.
Okay.
Bare basics. So yeah, these are like the lines right here that. So if you want to use these right here and follow along like that, you can use them too. And then how how I put in positions, is say if I was putting in my position right here, so this is my position. I move that my stop loss wherever I want it to be, and then I move my take profit wherever I want it to be. So say like right here, right? And then I just you just right click on it, and just show like this all these little options. You just click on create limit order here, and then it's just on this left side. It looks kind of confusing, but the main thing is that you want to just it should be this unit right here. So it's what we call units. It's either positions, units, is what we just called it. So yes, positions, units, contracts. They're all the same thing, but basically it's just like you buying positions, right? So buying your position, and then so you can put in how many positions you want, right? So I usually just put in one position, and then you can either get rid of it or you can click on buy down here. So if I just get rid of that right here, I click on the X. This right here shows me like the projected what's it called, the projected of my projection of my take profit and my stop loss. So like I'm risking 95 for 193, right? So this here is like it's kind of like my ghost order. So this thing doesn't actually go in until I click this buy right here. So the second I click this buy is when this like changes colors, and this is like my confirmation, right? So what this is saying is that the second the market comes to hit this blue line right here is when I buy my position, right? So since this thing is active right now, and it still hasn't bought my position because it has not hit this line right here. So I could like buy mid market, so like how I did right here, how the market is just right here. Move this to this side. So the market is right here. So the second I put my order in. So the second it comes down to hit here is when my position comes in. So that's just how you get to your get to your long and short orders, and how you put your orders in for these positions, these little graphs here. Okay. Okay, so another really important thing here is that when you're trading, you always want to like, you really want to switch between time frames, right? So, is what I was talking about earlier. So each candle here is representing as a number, right? So if I do come up here, put in the click on the 5 minute, right? So each candle here is 5 minutes. Like if I went to the 1 hour here, each candle here is 1 hour, right? So what you want to do is when you're trading, you want to switch between like the 1 hour, 15 minute, 5 minute, 1 minute, and you kind of like they have like the different roles. So the higher the time frame, so like the 1 hour, 4 hour, 15 minute, the higher those are, is like the more strong indicators that they are. Alright, so if I would look at like this, right now I'm the 1 hour. If I would look at here, let's see. Right, so this right here is what we call like a, let's see here. Like a fair value gap. I'll get into that a little later. But right here, so this is like a strong zone right here. This is what we call fair value gap. It's a strong zone. And since it's on the 1 hour here, it's like it's even a stronger zone than if I were to be like on the 1 minute and I would look for like the same thing, right? So if I would look for the same thing right here, this right here is also a fair value gap. But if you look at this zone right here, instead of like on the 1 hour, it came out and hit here, it tapped into it tapped it and rejected off of it like this. That's what it did on the 1 hour. But on the 1 minute here, it went into it, but it went straight through. And so.
Wait, so, did you explain like what makes a fair value gap?
Oh no, I haven't gotten into really anything. It's really bare bones. I'm just saying that
okay.
how important like the different time frames are, right? So yeah, the lowest like this 1 minute here is not as strong if I was gonna look at like the 1 hour. So this is the 1 hour.
So would you say like for higher time frames, it's kind of like the more broad picture, and if you scale down your times, then it's a more precise like
yeah, that's
point on the market that you could actually buy from.
Yeah, so yeah, what we use the higher time frame for is to mark out zones that the market is most likely going to come in hit and then either reject off of it or like go through it, or like we're just gonna use it as like our confluence as to where we're gonna put our trade. And so that's what you do on the higher time frames. You put on like your you get like confluences to where the market's gonna go, and then to enter your position is then when you go to the lower time frames, right? So I wouldn't be trading on the 1 hour here, so I wouldn't be putting in my positions like this, right, on the 1 hour, because like sure you're gonna make more money here, but it's like what was it it's a lot less like you won't get like the best entry, right? So if I were to enter like a buy right here, right, if I would enter a buy here and I would have set my take profit right here, or I guess here let's go like this, my entry is right here and then my take profit is at this high right here, right? So if I would have put out my position right here, I was gonna look for a position. I wouldn't use the 1 hour here. Instead, I would go to the 1 minute here, and then see, how the market is right here, right? So, and then on the 1 minute here, I would look for like it'd be like another fair value gap. So, say I was in like say there was a 1 hour fair value gap inside this zone right here, and so say the market is coming to this zone right here. I would put my take profit right here. And my position right here, and I'll move my take profit to wherever I want it to be. So I just wanted to like take away like the fact that you enter positions on the lower time frame and you get like your bigger picture of where the market is going on the higher time frames. That's what I think of it as. Okay, let's go over for. You guys have any more questions? You guys understand what I meant there? Okay.
Yes. I guess.
Not really, but
Okay, I'll just go over it again then. It's fine. Okay.
Well, what are you confused on, Kurt?
Yeah.
Kind of
A
everything?
lot of it, to be honest.
Okay.
Yeah.
Yeah, it's a lot to take in right now.
So I'm kind of thinking, is it because it's moving so fast that we want to look at minute wise or in minutes versus in hours? Because um you because it's moving so much so fast that if you're waiting too long for the time frame and you're waiting too long in minutes or hours, then that means that you might miss out when you are putting a bet in.
Not really. It's more as like say, so right here, on the 1 minute here, this is how it looks like, right? So on the 1 minute, uh, this is how my position would be here. If I were to go into the 1 hour here, if you look at it, this is like my position right here, right? So that big position on the 1 minute, it looks like this, right? So if I was targeting on the 1 minute, or if I was targeting a position like this, right here, or I say over here, right? Let's see here. On the 1 hour, it looks like this, right? So this is my position right here, right?
Super
So
tiny.
yeah, super tiny like this, right? And on the 1 minute, it's this big. So if I was starting a position, like say right here, right? So I would look to my left here. So you kind of always want to look to your left to figure out where you want to trade or like where you want to enter. So if I was looking on my left right here, so this right here, this zone is a big like a zone that I would look at right here to find like where I would enter, right? So I say right here, there's a fair value gap here, right? So if I was gonna enter right here, and I feel like I was like this, like I'm thinking that's gonna go long right here. This right here, it looks like it's good, right? Because I have my like a position here. It's a strong position, right? If it comes to tap into here, I think it's gonna go up, right? But what market does, it just keeps going below. The reason is because if you go into the higher time frame, the market says differently, right? What the market has done is the market wants to move down on the higher time frame, but on the 1 minute, the market looks like it wants to go up, right? So you kind of want to scope out on the higher time frames to find your overall picture of like where the market is gonna move. So if that made any sense. Do you get that, mommy?
think it I think it does, but not really because I don't know all the stuff yet, but I think that's one.
It's not really a matter of like what this stuff you kind of know.
No.
It's more like just
Because you're
understanding.
using the 1 hour as a well, I mean, when you're trading and you're choosing the 1 hour, okay, so you're looking at 1 hour, all the action that happened in 1 hour, right? So you're using that a whole hour of all the movement to try to make a bet.
It's more to get like the big picture of the market, right?
Okay.
So you know like how the market always moves like this, right? It goes down, it comes back up, and it comes like down again, right? So market makes this move like this. This is how the market always moves. It's either in this direction, or it goes up, like this. Right. So this is how the market moves. Right. So it's either going down. So what we call a short, it's going down like this, or it's going up, and you can see this. It kind of looks like this is like the candles. Like let's see. If I go to the 4 hour, might be a bit better. But yeah, you can kind of tell, right? So market makes a high, right? So makes that this little let's see here, makes a high like this, then it makes a low, then a high, right? So if you look at right here, market makes a high, makes a low, high, low, like this, right? That's how the market always moves. So look at high, low, and down here, it's let's see here, if I can find a better representation. Market's just moving up here. Let's see here. Yeah, they're here. So it makes a low, a high, a low, a high, a low. So this is what if you're targeting a short, this is where you'd be looking. This is like how the market would be moving, right? So goes down, goes up, goes down, goes up a little bit. That's a short position, and then a long position is let's see here. What was that? Yeah, if it goes up like this, like just
So when we're looking at all those highs and the lows, then when you're trying to make a bet, you're trying to get it when it's high. Is that what you're saying?
trying to get it when it's high, for
Make a bet? Are you trying to enter a bet when it's high? Or you're just making a bet that hoping that it will go high so that you would actually gain.
yeah. So wait, are you saying that like?
It's
So,
like all those highs and lows, right? Are you
yeah.
trying to just enter at a point hoping that when you put your bet in that it's gonna keep going higher and then you end your bet?
Yeah, yeah. So like, say in this case right here, right? If I were to put my position here, I'm betting that it's gonna go up, right? I would bet like it's gonna go up to this point right here, and that it won't hit this point right here to lose my money, right? So the second it hits here, I'm betting that it's gonna go up. Is that what you mean, or?
Yeah, I think kinda, yeah. But
So it's basically like the prediction of where you think it's moving.
Yeah, yeah. You're kind of like you're predicting what the market's gonna do. So like, so if I was putting this in here, if I was thinking this is my position, I'm predicting that the market. So like, say all this right here happened, right? So it came down here.
Brandon.
Yeah.
Oh,
Huh?
sorry. Oh, yeah, Lana, I was just gonna ask you a
Oh.
question. You can finish talking.
Okay. Yeah, it's just like, so what I would be predicting is that the market comes down like this, right? Then it comes up, right? So, what I'm looking at is like, I see it comes down like this, and then it pulls back up like this. So this is like, say the market, all this happened here, right? Let's see, I think it's this thing. So this is what I see right here. So I see like the market has done this. Let's go with this. Right, so this is what I see. The market comes down like this, and it comes up like there. So what I'm predicting is that the market, if I put my position like right here, right, I'm predicting the market is gonna come to this position, and that my stop loss is gonna be here. So the market won't come to here to take me out, and then I'm predicting that the market is gonna come to this high right here, to make money for me basically, right? So if we like get rid of this thing right here, what market does is the market came down to here into this position, and it pulls back up here to hit this high right here, which is my take profit. Is that what you mean?
yeah, that was more clear for me.
Okay.
Landon, where you're putting that red and green or that graph. So you're saying that okay, so that's your stop loss profit or stop loss graph. So if it gets to the very bottom of that, you lose money. But if it doesn't hit the bottom, do you still lose money if you're in the red or?
No, yeah. So, you kind of think of it. I think of it as like, you kind of never lose money until it hits your stop loss, right? Or until you get out of your trade. So if I was in here, if you're looking at here, so if I entered my position right here on this blue, and if you're looking at this orange right here, if you look on the right side, this is like the negative money, right? So what market is, it pulled down like here. So this went all the way down to what, negative 27.50, right? Or 27.75. So this right here is like, I guess I am down like $2,000, but if the market doesn't come all the way down to here where my stop loss is, I don't actually lose all my money, right? So what it does is it pulls back up here, and so I haven't really lost or made any money until I exit my position.
Okay, and then if you are having that, like the top of your green, does it automatically like I guess like cash you out, or do you have to do it yourself?
So using these things right here, they automatically like you take your
It
profit.
automatically.
Yeah, it just
Okay.
automatically takes the profit.
You don't have to like sit there and necessarily watch it.
No. So yeah, how would it usually look like? It's like, say, if I'm like trading here, right? So market is right here. So say I bought a buy position here. So this is my position right here. I move my stop loss. I mean my take profit is like right here. My stop loss is say down here, right? So like right now I'm in the green, and it's just gonna slowly moves up and say it hits right here, then I'm gonna make $30. But if it comes down here, like I'm not losing any money until I get out of my position. So let's say if I exit right here, I just made $10. Is that like what you're asking, or?
Yeah, I just wanted to know if it like would, if you weren't watching it, if it would just stop you and like you know, exit up you. Yeah.
Yeah. If
So
you
like that graph you do,
yeah.
like if you make one and it like goes past the time, does that cash you out too, or
Goes past the time. What do you mean by that?
like that? Like you know how like it goes past like the furthest right part.
Oh yeah. Okay. So yeah this when I extend these like this, I'm just doing that for like just like better, like you can see it better. So left and
Yeah.
right don't really mean anything. So right, if I move this over here, it's still the exact same thing as if I entered right here, right? So none of this matters. So if I put this thing right here, and I still added my position, it's still just like, it's basically this whole line right here. So this thing spans across the whole graph right here. So yeah, left and right don't really matter. It's more like you're betting up or down. So yeah.
Okay.
Alright, any more questions? Any more confusing things?
Yeah. So Lennon, do you actually sit there and watch it all
Oh,
like a lot, or
No, actually, it's for me. It's like see here. So for your strategy, it kind of depends, but like what you do is like you look at the say for like a normal day for me, right? So if I was trading here, I would go like to the higher time frame, like the 1 hour here, and say I was trading like this here. It'd be better if I use this, right? So if I was trading like this, right? So say the market is right here, and I have like a fair value gap right here, right? So how normal day would look like. So I mark out like my key confluences that like I think the market is gonna reject off of, right? So I mark this on the 1 hour. I come back to the 1 minute, right? So if we're looking at here, I have this huge fair value gap, and say if it comes to here, I put my buy position like this. So this could be anywhere, right? So as long as it's like where you want it to be. So I put my stop loss like down here, I guess, and then I take profit up here, right? So say I enter my position. Oh, they actually added this. Oh, that's new. But yeah, so right now this is like my replay mode, but I'm basically I can able to control the market. So right now I'm like skipping the candles if you see them. See how the market is moving down slowly. Yeah, zoom in. So once it hits this right here, it enters my position, right? And so with this take profit thing, it would do automatically for me, but it would be like this, right? And so during this,
Don't move so much.
huh?
Don't move so fast.
Oh.
Your cursor's everywhere. I'm trying to follow all the your moving mouse.
Yeah. Okay. But yeah, so basically as long as it don't hit down here, I'm fine. So if I skip the time here quicker, so this right here, so each candle here is 1 minute, right? So if you look at the bottom down here where my cursor is, this shows like the time frame right here. And if you're looking at the bottom again where the timer is, the time, if you look at the, it like slowly moves, right? So if I move left to right, it moves the time. So you know each candle here is like represented by a time. So right here it's 12:26. So if I move over to like click it up here a little bit, right now it's 12:36. So what I'm doing, I'm just skipping the time here. So if I like fast forward it, you can see that market slowly moves like it, right? So right now I'm in the green, and then if it comes down here, no, I'm in the red. So slowly the market moves up like this. And how I would trade is so say once if I put my position here, so or is this here, better represent like this. So right, so I say I'm in this position, right? I mark down this fair value gap, or just like a position, a confluence where I think the market is gonna go and hit. I could like right click, and I guess you can't see it on here, but let's see. I'll just go back like this. Yeah, so if I right click, you can see like add alert right here, right? So I can click on this right here, and if I click on create, so once the market hits this line right here, it makes like a sound for me. So I usually do like other homework, I do like homework or like I don't know, play games, whatever. So the second the market comes, like say I put it right here, the second the market comes to hit this, it will make a sound, right? So I would put it on like say if I was going back onto this fair value gap, right? So if I put an alert right here, right, or I guess, yeah, alert like right here. So if I see that it's coming down like this, I would get an alert, and then I would be in like this position right here, right? So it hit the alert, and then I come back to like I look at the graph, right, and I'm like, okay, I think the market's still gonna like I just like double confirm that like, okay, maybe this is like a good position or not, right? So then I just double check it, and like, okay, I put this here, I put my order in, everything like that. I'm like, okay, I put my buy position here, and then the second it hits it, my position's in. So that's how kind of like I automate it, so I don't have to like sit on the computer 24/7. I could do other things.
So what a little bit I learned is that there's a setting that you could put your stop loss and your win. So basically you are limiting your own self, like how low you want to go and how much you want to make, you know? So if you set that, then the app or whatever will always stop at that.
What do you mean?
But if you want to sit there and watch, and bet, you can do that. But if you want to set yourself a limit so you don't lose too much, or when you're good with winning whatever that amount is, and not risking, then you can put that there, and that's what they call it. I think the stop loss or something, like you're putting yourself within a limit. But if I understand right, you can also not have that limit, but you can also risk losing more money.
Yeah, so yeah, what you're talking about is like what is basically I was saying, like the stop loss and the take profit, right? So if I was in this position, right? Let's move this thing back down to here. Yeah, you're just saying like what I kind of just demonstrated here, is that what's that enter here? Alright, so that I don't know. I think you guys heard that alarm, but that's like the little alarm that like, okay, you just hit that point. So I would go back onto like the market and I'd check, you know, what I want to see, right? So well, I think what you're talking about, Maya, is like you're talking about this, right? So like, so this right here, I wanna just stop at $1,000, and then like say I wanna risk like $400, right? Is that what you're saying, Mami? Like this is like my limit right here, so I can just make $1,000.
Yeah, because I think NTJ was saying like, do you have to watch out all day? But it's more like each day you're setting yourself a limit, like in dollars or something like that. So you don't have to watch all day. If you set it a certain way, then the app or whatever, it'll kind of just stop once you reach your mark.
Okay.
Your
Yeah.
mark.
Okay. Yeah. So yeah, what you're thinking is that like, yeah, it can go on forever, but the reason why we set like take profits and stop losses is like for the stop losses it's like you put it on like what we call like lows, or like highs or lows basically, but basically we put it is like where we think the market won't go, and then we put our take profits where we think the market is going to go. So in this case right here, so this would be like an actual take profit I'll do, right? So I'll put my take profit right on this high right here. So if you look at this candle wick, we call this a high. So the second so because like once market comes to certain highs and lows, so highs and lows are basically, it's like what this arrow is talking about. Comes like this, right? So this right here is let's say like this. So this right here is a low, this is a high, this is a low, and this makes like another high right here, right? So that continues for like forever. So if you're looking at it as like here, this right here, yeah, this point right here is a high. This right here is also a high, but it's not as strong as this one right here. And then if you look at this one right here, this is a low. This right here is a low. This is a high. This is a high. This is a low, 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 right? So what we do is we look at these lows and highs right here to put our positions. So what market does is it say this right here is a low, right? So these are lows right here, and I would put it right here, because if it come like it's part of different strategies, but if it comes down to here, in my mind, I think that it's gonna come down to here. It would do something like this, right? So it comes down to here, it'd come below, it would come up like this, and continue down lower, right? So that's why I put my stop loss here, because I think the second it comes to hit here and come to break this low, I think the market is gonna continue down lower. So if it comes to break here, that's where you get out of it. And then for your take profit, you put it on like key like highs and lows, right? So I can put my take profit on this high right here. You won't make as much money, but you're still gonna make money, right? So you can put it on this high right here. So I'm looking at here. This is a high right here. This high right here, and so this is like the top, the most highest high. So I think that like once it hits here, I would look at the market again and see like, okay, maybe is it gonna continue higher, or is it gonna reverse back down lower, right? So if you look at this this part right here, right, this one comes down to here, it sweeps certain lows, right? So this one comes all the way down here, sweeps these lows right here. This low, again, market comes down here, sweeps this low, and then it reverses back up. So what I'm looking for is that the second it comes to sweep, let's see here, I can go like this. So the second it comes to sweep this low, I'm thinking, okay, is the market gonna I'm looking for certain confluences, but is the market gonna like push back up like this and then continue down lower, or is it going to pull back up here and then maybe come down a little bit and then continue higher, like what did you do here? So that's why you put it on like you put your take profits on like certain key highs and key lows to take your profits, so you don't risk like the market coming back down here and sweeping at your low, right? So with the market, if you say you never had this thing on, right? So I think what NDJ was talking about is like, say this thing had on like forever, right? And so I never took my take profit, right? So say this thing went up higher like this. Alright, so this is what the market did, right? So at this point, so the second it hits here, right? So this is where my high was. If I put my take profit right here, I would have got my take profit taken out, right? So I would have made my money. But since I removed my take profit, or you can like move it higher, right? Then I'm still in this trade. So what the market could do is that since I still have my stop loss here, you kind of always want to put your stop loss so you don't lose like money basically. But what the market could do is it could just drop like this, right? And it could come to hit my stop loss. Since I never took my take profit, I never made my money. So that's why you put take profits on like certain key highs and lows, because that's what the market is going to go and target, which it does here. Like it targets this high right here. And then the reason you take your profit is so the market doesn't, I don't know, crash down or hit your stop loss.
I think I'd say like pretty much the box, the red and green box, it's a limiter, so that when the market hits the very top of either side, the bottom or the top, the order will confirm. That way you don't have to worry about it like going on forever or you sitting there trying to do it manually. You don't have to worry about that, because that's the point of the red and green box. It's to have you confirm, like make sure that the market does not surpass that limit. You're setting a limit to how much you want to buy and how much you're risking.
Alright, any more questions?
That makes sense.
Okay. You get that?
So Landon,
Yeah.
so I get all that. To me, none that's confusing. I guess what I'm asking you here is, so you set your limit on top there. If you set it really high, then that means you have to kind of check it, because if he never hits that, then you won't cash out. That's what you're trying to say, right?
Yeah.
Mhm.
So you top limiter. So if I say I'm gonna say if it hits $1,000, if I set my money line to $1,000, if it never hits that, I won't ever get paid out because it's never hit that limiter.
Yeah.
Mhm.
But I could still sell it and take, if it's in the green, I could sell it
Mhm.
versus waiting for it to drop down to the red. That's what you're trying to say, right?
Yeah. Yeah. So
You can manually sell out.
Correct. So that's just so you manage. So if you want to just sit and watch it all
Mhm.
day long, you could.
Mhm.
Yeah,
But
you can do both.
this allows you to say, hey, like if it hits this limit, like just cash out for me. I'm good.
Mm-hmm.
Same with your negative. If it hits your negative at $80, you go okay at $80. Once it hits that, uh, like sell it, like get it out of there, right? And that's
Yeah.
kind of what you're saying.
Yeah.
So the only thing that I have a question on is that earlier when you were showing us, you did the green you did the green on the bottom side. So how we what is that about? Like
It's I don't know.
yeah. So if I'm doing that, what do you mean by you the greens at the bottom and you selling it at a loss?
Yeah, okay, so I don't know if you heard of this, but it's basically I think of it as like a bet. So you're either betting that it's gonna go up, or you're betting that it's gonna go
Correct.
down. Yeah.
Yeah.
So here in
It's like-
this, yeah, so in this position here, or like, so this where my cursor is here. This right here is where my position is, right? So if I were to put my position right here, put my stop loss here. So if I'm right here, I'm betting that's gonna go down. So so this right here, that's what the green is represented as. So I'm betting that's gonna go short, and then
Mhm.
this one is I'm betting that's gonna go up. Is that what you mean, or? Yeah.
Yeah, it's just
So
like betting.
high.
It's like over and under. You betting the over under in the sense of you're betting that the market is gonna go down. So to cash out, you're gonna place it on the bottom end because you're thinking that it's gonna cash out. It's
Yeah,
gonna crash
you
out.
pretty much make sure that your green side is going down, because
Yep.
that means you're betting that the market will move downwards. So once it hits the bottom of your green box, then it cashes you out.
Yeah.
Yeah. No, I get it.
Yeah.
Yeah, it's not too difficult. I understand the whole concept behind it.
Okay. Yeah. Yeah. It could be like different from like stocks. So like stocks, you kind of just like you want to just keep going up, right? And that's like yeah, that's just how stocks are. You just want it to keep going up. But like in futures here, you're day trading, so like you just like you think of it as like betting, right? So you're betting up or down.
Yep.
Audrey, you said something? Audrey or Mom, I saw you guys unmute yourselves.
No, that makes sense in that when you're betting, you could bet. It's like I think like what Landon was saying because my mind's thinking so much about stocks, how you want it to go up so you can profit, but day trading is more about where you want to place your bet. If the trade is going to go up, is it going to go down?
Yeah.
It's not about stock where you want your stock to go up higher so you can earn money. Day trading is more about where you're going to place your bet. Is it going to go high? Is it going to go low? So the way you're making the money is just where you're placing your bet and predicting how it's gonna go.
Yeah, exactly.
Yeah, I'd say like for trading, the market, whether it's going up or down, does not mean one is better than the other. It's both equal. What you take out of that is if you're pretty much betting on whichever direction the market is going. Like regardless if it's going down, you can still make money. Unlike stocks where, like you said, you can only make money if your stock that you're putting money into is actually going up and only up, which is the difference. Because I think at least an issue for me was like at the beginning I never really understood why you would want, if the market's moving down, I'm like, isn't that a bad thing? Like I don't want to take a bet because I'm just gonna lose money. Like normally moving down is bad, but that's not how trading is. Like regardless of if it moves down or up, you can still win money either way.
Yeah, that's for me. That's a big eye opener because I was
because the
thinking so
difference
much
market
about.
and future is like really different from like stock, like just trading in general, just stock in general. There's so many different types of ways to invest. So the way what you're doing is the future where you could just basically gamble up and down. But then what I do is a long-term stock where you buy, you just leave it there and you just want it to keep going. So that's the difference. And I think like in general, like the main like stock investment that people understand is just buying a stock and hoping that it just keeps growing. But people that don't do everyday trading, we don't understand, okay, for future stock or future stock, you could gamble up and down, and that's how trading is. Daily
Yeah.
trading is, right? So I think that was something that I think you explained at the beginning that it would have helped all of us kind of understand the whole concept of graph and why you look at it that way first.
Yeah, I'd say for trading, you have much more control over rather than stocks, at least I'd say, because stocks you kind of just, I mean, you can still do your research like, oh, this company's like rising, it's doing better now, so you'd put your stock into that company. But this one you can better predict how you're going to buy and sell your stuff. So you have a little bit more control, rather than like stocks where you're just kind of like, oh, I hope it's gonna go up. I hope this one does good, and you'll
Yeah.
make money from it.
Yeah,
So
going
you
off.
have more controls, and you can use like certain techniques or strategies to better predict where the market overall is going to go, and that way you can make profit that way.
Yeah, going off what Gavin said is like basically, um, like the control you have over futures is different from like stocks. Like stocks, you research the company, everything like that. Then you think like, okay, this is gonna make my portfolio grow. But on futures, what I like is that you're basically just looking at the graph, right? You don't need to care about anything else besides just these little candles here. So that's all you need to worry about. You don't need to worry about like which company is doing good or not. So that's what Gavin means by like your better control.
So when you trade like this, Landon, you so the payout is for. So let's say we do the payout. So let's look at the day trading. So today you move your graph. You put your positions in where you put in where you think the market's gonna go for this specific one.
Mhm.
So is there a certain time frame where let's say you never hit those cap, or let's say you put your parameters in, you don't ever hit it.
Like this.
What? Yeah. So let's say you never hit that.
Mhm.
When does your day close, and then how do you get paid at the end of it? Is it like every day? Okay, let's say today I made $100 from today's trade.
Mhm.
So how does that reflect on each day? And how does it keep going?
So
You get my question? Because you get my question?
wait, so what you mean is like if I never take my payout, then like
Yeah.
oh.
So let's say you don't take payout. So let's say you put your parameters in, your high, your low,
Mhm.
and you put you put everything in the way like you have right there.
Yeah.
Let's say it never hits that today.
Yeah.
So we call this day trading, as in, is there like a specific time throughout the day
Oh.
that
Okay. Oh yeah.
it's
Yeah.
So
gonna
like the
it's gonna
are
close?
you so sorry
Yeah.
you asking about the market close and market open?
Yeah.
Correct.
Okay.
So
Yeah.
Yeah,
so I'm just
so
Okay.
for me and my from my like what I do stock, I know the market opens as I think it's like 6 or 8, I can't remember, but market closes at 4 p.m.
Yeah.
Eastern time.
Yeah. Okay. Yeah. So to answer your question, yeah. Okay, I understand. But yeah. So so there's different sessions, right? So the Asian session is like I think it's like 5 p.m. or 6 p.m. You know, it's 5 p.m. to like now, right? Or like it goes all the way up to like 8 a.m. And so at 8:30 a.m. is when the London market opens up, and so that's the market that we usually trade, simply because the market is really like volatile, right? So if you were looking at how like earlier how slow the candles were moving, that's because like we're in the Asian session right now, and so yeah, the reason people don't trade that is because it's just so slow, and so the reason we trade London was because it's so volatile. So like the candles actually move like this, right? They actually move like up and down violently like this.
Mhm.
So, uh, so at that time, so that's where we usually trade. So the London market opens at 8:30 a.m. So you can trade between 8:30 to 4 p.m., which is like Anti Pahal was saying, right? So
Mhm.
it's just like stocks. So you trade in that time frame. It doesn't have to be exactly at 8 a.m. It's just in between that time frame, right? So
Yeah.
that's
So
what you're
so
saying.
so so
Yeah.
since let's say, okay, so let's say we do the 4 p.m. That's usually the U.S. market. When it closes. So let's say at the end of the day it closes, and I'm at a positive. Let's say a positive $100.
Yeah.
Um. So then that $100 technically is mine, right? I'm just saying, in a sense, that one's mine. the next day opens, then I start that all over again.
Okay, yeah. So imagine it as like this graph right here, right? So say I enter my position here, and say the market ended right here, right? So end of market's not moving, and so you're waiting for the next day, and this still hasn't hit my take profit. So, I think based on the I think it depends on the firm, but most of the times they just close your trade before. So right now it would have closed my trade like say like right here, so it would have closed my trade like on this candle right here, right? Or I see, I'm like on this candle right here. Seems like annoying. It would have closed my trade on this candle over here, so it would have closed automatically simply because like once the market opens, there's like a huge volatility usually, so like it could be like let's see if I could find it. It's kind of imagine like these candles right here, right? So this candle right here, there's like a big move up, a big move down. So this right here is 9:30. So that is like a what's it called? This is the market open right here. So my time frame is like a little different. I'm basically up in 1 hour on this time thing. So this is 8:30 for us. Let's see, 8:30 market open. Market moves up like this, moves down like this, moves crazy, right? And if you look at these other candles, look how like tiny they are. They have like no movement, and so sometimes the market could be like, say the candle could have been like moved out to here. It could look something like this, right? So imagine this is your candle. It could just move like this. It could skip like a whole, like imagine this green one didn't exist. You could just skip this whole thing right here. And so usually you don't want to hold your position for the whole day, because you a market can have like a big candle, like right. So you're looking for like a long here, right? You're about to hit it, but say you had your position still. Market moves like this, right? So this is like a candle, right? Market moved all the way down here. It moves so quickly too, because there's like such a big move, and it's like such a big candle that you can't even stop it, right? And your stop loss is like down here, right? So it hits your stop like this. You just lost all your money, and you lost all your profit, because you never took it out. And so usually you never want to. That's why it's called day trading, because like it's in that one day you enter and exit out of your trades. So you really don't really want to keep your trade on like the whole day, unless like you're doing like a what we call like swing trading. It's basically kind of like day trading, or it is basically, but you're just thinking of it as like the like you're holding your position like days and weeks. All right, so you like swing trade like on like the 1 hour, right? So if I had a position here, let's see, right? So this is my enter my position here. I have my take profit here, stop loss here. So this right here would be like a swing trade. You would hold it. This would be like what? I think it's like the whole day. Yes, from Thursday at the bottom here. This is like Thursday 12 p.m. to like Friday 3 p.m. for 2 p.m. So for day trading, you don't want to hold the position the whole day. You just want to exit and enter the same day. That's why people. Yep. Yeah.
I get that part. I was saying, okay, so I set my parameters on the time to it. So you have it at 3 o'clock, whatever there. So realistically, at that time, it's gonna end my trade or end my session, and then that money, whatever I gain or lost, that's what I owe. That's what I get back, and then the next day I just start this position all over again.
Yeah.
That's what you're trying to say, right?
Yeah.
Yeah, you start fresh the next day.
Correct. So it does. So let's say 4 o'clock hits, Wall Street closes, everything's done, right?
Mm-hmm.
And at that time, if my parameters I set, it's gonna automatically close me, because if I have that set to at let's say at 3 o'clock, like say at 3:55, it's gonna cash me out, or I'm gonna go negative regardless.
Yeah,
and then the next day I start over again.
Yeah. So say you're starting at $0 here, right? And say you went up to here. This is your parameters, right? Your take profit.
Yep.
You never take your money. So right now, if it closed right here, you're still basically, say this is like $100 right here. So you're still at $100 here, but you don't actually have that money, simply because you never took your position out. So this right here is just $100 sitting here, and so the reason you want to take it out is because it could crash down, right? Take your hit your stop loss, or you can just wait. Maybe it's gonna hit here. So
okay, so all right, let's go back.
Mm-hmm.
So you're saying that if I hit that, so I had the parameters, they have it set for 215 there, right? Mm-hmm. So let's say it hits 215. 215 there, I didn't take out my money. It literally just sits there because I didn't take it out.
Yeah. It just sits there. You haven't made or lost any money. It's just there.
So then what happens to that on the next day?
You're still gonna have the 100. Like say this right here, like it just moved like this, right? So say the next day starts, it starts moving like this, right? So
Yep.
at this candle here, you're still at the $100, and this is like it's still moving, right? So if it was just like a normal day like this, right, and it starts slowly moving up to your parameters here. So right now you're still in the green, right? So this is like 150 right here. So this right here would
So
have been.
so
Hmm?
so in a sense, you're saying that. So essentially saying let's just hypothetically say I put my parameters at $1,000,
Mhm.
right? On the take.
Yeah.
I literally could let it sit there and don't do anything at all until it hits $1,000.
Yeah.
So
That's
let's say
if.
if I go the whole week, I say okay, I'm just gonna set it for $1,000 the whole week. And I don't watch it. I just let my take gain on top.
Yeah.
As I don't care what the market does, as long as it hits $1,000 and then it will cash out.
Mm-hmm.
Hypothetically, you could do that, or is that something that you're saying that?
Yeah.
Because you're saying that my money will sit there until the next day, and then it will just go up and down again until it hits uh, my take home,
Yeah. Exactly.
right?
Right. Yeah. Exactly. Yeah.
I'd
So.
say, I'd say, I mean, you can do that, but again, the market is unpredictable.
No,
So
yeah,
even
I
if
get
the
that.
yeah,
I was just saying hypothetically, like I think that if let's say I'm a lazy trader, I'm just like
Yeah.
I don't really care. I'm just gonna set my goals for $1,000 every week and let it go, right?
Yeah.
And as soon as it hits $1,000, pay me out, and the next week I'll start over again.
Yeah.
So technically, you could do that, right?
Yeah,
Yeah.
you could do that. So there's a way to go in and like it gives you the option to say, okay, I want like if I want to purchase it, I'm just gonna leave it there for 1,000 and say you could like at least from what I've seen on the platform that I use, you could set into like number of days, and then when it within that 30 days or whatever you need to reach like 1,000, then and then it just
Cashes out.
cancels
Okay.
like your request.
Yeah.
But
So.
if it does reach that 1,000 within that 30 days, then it will automatically move it for you.
Yeah. Okay.
Okay.
So
Yeah.
that's for my platform. I'm able to do that.
Yeah. I was saying, but there's like the bad thing about that, as I say, yeah, $500, right? So this is your position here. You say this is
Yep.
$1,000 here. This is the $500 mark, right? So so this right here, this is how much room you have. So like if the market comes down here, you lose all your money, right? And like
Yep.
the market, it could be really unpredictable. Right? So if you're looking at it right here, right? So what market did is that it came all the way up to here, right? Came up to here and moved up, and then moved down to sweep this lower here. So say it was looking like this, right? So say you're in this position right here, and this is all your $500 right here on this low, right? And if you look right here, market comes to sweep you out. So it takes your 500, and then but this is like your $1,000 right here, right? So the reason that's bad is because like market likes to fake out like this. So this right here it would be like it's called what we call frick. It's basically that the market is moving down to take out people that just have like their stop loss just right here. So
Mm-hmm.
so if you since this is your $500 here, this right here is a winning trade, right? So you still make this $1,000 right at some point, but since you put your stop loss here, you put all your money right here, and your position is not that good. It's because and then you get stopped out here. But even though it's a winning trade, you still get stopped out. You don't make your money.
Mm-hmm.
So the bad thing is like say you entered you entered right there, you missed all your money like that. Then what was it?
Yeah, I get it. I was just saying hypothetically, because what you're saying, because I guess my question earlier was just where does the money go when the market closes, right? So
Yeah.
you answer my question that it sits there and rolls over to the next day, and then it starts in a sense starts again. But the reason you do it every day is because the market fluctuates. So then let's say you know that today's market is gonna go down. So now since it's going down today, I want to bet down because I go, hey, like I know it's gonna crash today.
Mhm.
You know, it's gonna go down a certain amount today, so I'm gonna bet down. So I get that part. I guess
Yeah.
I was
Okay.
just kind of sitting there because because in the sense that you go, okay, what's my so if I cash out let's say I cash out today at $100,
Mhm.
and I sell, that means that money automatically comes into my account, correct?
Yeah.
And then tomorrow, then I will put that money back in a sense, if I want to trade again.
Yeah. 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 So
Okay.
like, yeah, say that you $100. You have $100 in your account, right? This is like $100 trade. So you take out your $100. Now you have $200 in your account, and then you can use
Correct.
that. Yeah. And you can use that.
No,
To
I
trade.
I got you.
Okay. Yeah.
Yeah, I got it. Yeah, it's easier than it looked. I guess when you move so fast, I couldn't.
Yeah.
I
I
was
know.
trying to catch up, but then once I kind of got the lingo and what you're doing, I get it. It's actually easier than it sounds.
Yeah. Yeah. I don't know. I talk really fast. I go over things really quick. I don't know.
No, we're good. We're good. I got you.
Okay.
You're doing a good job, boy.
Yeah.
You're doing a good job.
Yeah. Also, for another thing I want to go over is like say like you're doing that one hypothetical thing we're talking about. So what you could do is say like you enter position right here, right, and say you want to like let's say the market was only right here, so market closes here. So what you can do is you can take your stop loss and you can move it to break even here. So what that does is basically if your stop loss is moved up to where it's $0, or you can move it up to like say if I were to put this thing in like this.
So the red is what is the money that you have only, right?
No, the red is like it's not the money that you have because you don't want to risk everything on one trade because you're gonna
Correct.
take losses at some point, right? So
Correct.
the red is just like you would move it to like certain key areas where you know the market is not gonna go, right? So in this sense, since I have like a lower here, right? So what I'm thinking in my head is like, okay, I know the market is not gonna come and sweep these lows because reasons, right? And if it does sweep this low, then I'm glad I took out because the market can like it can sweep this lower here, right, and it can come back up to like this, right, and then it can come back lower like this. So that it could what we call like a change of character. It can continue downwards. So that's why I want to get out of that trade.
So quick question, Elena.
Mhm.
So the money. Okay, so let's say in my account I have $100 in my account.
Mhm.
What is the max that I could put in then? So you know how you put the my gain on top there and my parameters.
Yeah.
So let's say I have $100. Where do I stop? Where can I stop? Like how much can I bet? Is it just $100?
Yeah.
Or I just keep moving the needle.
Yeah. So you can only bet $100. Like it's like let's see here. Yeah, you can bet only $100, but there's things where like say you're say the market like because there's like a little time lag, right? So say the market was like right here, and it just completely drops like this, like really quickly like that, right? This would have taken you out instead of right here on your stop loss. It would have taken you out like right here, right? So this right here puts you in the negative. So basically, you would owe them like say like $50 like this.
Yep.
So the reason so that's why like there's if you put like not enough money in there, it could do something like that. But that's really rare because the market doesn't usually like spike down like that. But
Yep.
also based on your account, there's like different sizes that you can put in, right? So for like so there's minis and there's called micros. So a micro is 1/10 of a mini. So so what's it here? 10 micros is one mini here. So those are just lower sizes that you can put in. So if I put in 5 micros, it would be half of this one mini here. And so what that is, it's basically it's half of money, right? So so this right here, so say this is like on the one mini, this is like $100. On the micros, if I put 5 micros in, this is $50. And so you're able to size down, and the less money you have to size down. So say if you put $100 in, I think the max limit is only like 1 micro. But say I put it in like $1,000, then I have I can use 1 mini.
Yep.
So yeah,
Okay, I got you.
Yeah, so you have like certain sizes. The more money you have, the less money you have.
Yep. Okay, I got it now.
Yeah. Another. Yeah. Also, it's going.
Yo.
Huh?
I'm about to leave, but are you gonna have like this on videos? I
Yeah.
can like watch it somewhere.
Yeah. I'll somehow. What's it called? Send a link to like the video that I'm recording right now.
Okay. All right. Sounds good. Thank you, bro.
Yeah. We're probably gonna end soon too, anyways. People got work tomorrow. Okay, yeah, but I was gonna go over to like how like when you're moving a stop loss, So say I would have entered right here, right? So say I entered my position. Let's see, where's the 5? So right, so this is my stop loss right here. So say the market moves up like this, and so say my take profits all the way up here, right? So you can move it to break even. So if it comes like here, you can see like the money goes to like 0 right here, right? So this is what we call break even. So you know if it hits here, you don't make or lose any money. And so what you can do is let's see if I can get this thing somewhere. Thing. But yeah, you can move this thing. Let's see here. You can move this thing higher. So like say usually I would target something like let's see here. So it's up here, it's moving up. So you can move your stop loss to like say I think I got such a bad position. Let's see here. So you put it like on lows, right? So say it's moving up like this, right? It hasn't hit my take profit. I can move my stop loss to like up to here. So basically if it hits here, I still get money back. So say you put it on like key lows, right? So if it comes to break this low right here, I think the market is gonna like reverse back down, and this is like my take profit. So if the market comes to hit here, I gain $123 or $235, but or you can move it to like break even here, so you don't have to risk much. But it's just like a different way of like saying if you want to like target that $1,000, right? So if you want to target that $1,000 like this, you can move it once you're in a good position. You can move it to break even here, and you can kind of just leave it the whole day. So you never have to come back. Sure, it could come down here, hit your break even, but you won't lose or gain any money. Or you can move this a little higher, so you can actually gain a little bit of money. But yeah, it's just saying if you want to automate that $1,000, you just target it like this. So that's another way of doing that.
So you could technically set it up to where you don't lose any money.
Yeah, but you have to be like in a good position, right? So
Right.
yes.
If you're in a good position where you could go, hey, I'm just gonna let my stop here, and then regardless, so I don't ever lose money, then I'll break even there.
Yeah. Yeah. So I mean, this like what's it called? You kind of have to wait for like certain confluences for that, right? So say if I put my break even here, so say I entered right here, right? So the market moves up like this, and I'm at break even, right? So if it comes to this gray area here, it takes me out, and then what market does, it comes to the area, it takes me out. But so you can do like that, or you can also see like the fact that market comes all the way down to here, right? So if I set my stop loss to like this low right here, right? Market comes down and inside this red area, and then it moves back up. If I put it at break even here, I just lost my position, and I could have made money, right? So you have to like balance it where like you have to like look for certain confluences to where I'm able to move mine to break even here, right? So the only reason I would move like in this position, if I entered here, the only reason I would move my stop loss to break even is the second it breaks this high right here. So the second it breaks here is then I move my stop loss to break even, because there's certain reasons, because it's like what was it? Because it just broke this high. So that's how I'm thinking like it's gonna change the character, right? So the market was moving down. The second it breaks this high right here, I'm thinking it's gonna start going up. Just change the character again. So then I'd move it to my break even here, so I don't risk any money. And so that's how like an actual trade would look like.
Okay, it's getting late, but Gavin, did you want to put in that link of that just because everybody can see the chat, right? When they come back on, if they do that link, that boot camp thing, Gav? Do you want to link that, or?
I mean, we can, yeah, but it might be better for Lennon to do it because he has like a playlist, so he can kind of look for more specific stuff. Because I mean,
Lennon.
not everyone's gonna be. It's not exactly. It's an acquired taste. His boot camp is so.
Yeah, just some links for whoever wants to learn more.
Yeah.
From the very beginning, like a beginner like me.
Yeah, I'll leave that to Lennon.
Yeah, so it's basically what we're talking about is just like I have like these playlists on like YouTube of just like I'll compile the videos that like talk over day trading, so like strategies and like the basics and stuff like that. So yeah, we're just planning to link that. I'll give you guys the link for that. But you guys have any?
Thanks.
Yeah, you guys have any last questions here before we end off?
Thanks, Lennon. That helped me a lot.
Yeah.
I gotta get to bed too.
All right, thanks, Landon.
Yeah.
All right, thanks, Landon.
Yeah.
I'll reach out to you
Yeah, for sure. Ask
how to
ask
get
any
started and
questions.
everything. Yep.
Yeah. All right.
All right, everyone, have a good night.
Yeah. Good night.
Yeah, you too.
Yeah.
Good night, everyone.